Hey everyone, welcome back to Control Cash, your no-nonsense guide to building wealth without selling your soul.
Now imagine this, you've got $20,000 parked in a high income ETF that pays you every single month.
Sound like a cheat code?
Well, that's exactly what I did with a fund called SPYI, and in today's video, I'm breaking down how much I earn from it each month, what I'm expecting to get paid this month, and whether this dividend powerhouse could make sense for your portfolio.
And if this kind of real-world investing breakdown helps you out, go ahead and smash that like button. It tells the YouTube algorithm I'm not just yelling into the void.
Alright, so let's start with a quick overview. SPYI is the NEOS S&P 500 High Income ETF. A mouthful, I know. If you saw my last video on dividend investing, or just love passive income like I do, you probably heard me rave about this fund already. As of now, SPYI boasts a 12% dividend yield, meaning for every $100 you invest, you could be pocketing around $12 per year, paid out in monthly chunks. Now, you might be wondering,
How exactly does SPYI generate that kind of income?
it's through something called a covered call strategy. And don't worry, I'll keep this simple, but here's the gist. Imagine you own a bunch of shares in a stock, let's say S&P 500. You can make extra money by renting out the right for someone else to buy those shares for you at a set price. That's called selling a call option. And since you already own the shares, it's called a covered call, meaning you're covered if the buyer actually wants to buy them. And in exchange, you get paid a premium upfront, like getting a monthly paycheck for letting someone else make a bet on your stocks. SPYI automates this entire process so you don't have to mess with options trading yourself. That's how it generates those juicy monthly dividends, by collecting option premiums and passing the income back to investors like you and me. So now let's talk about that 12% yield, which, let's be honest, is pretty high by most investing standards. And usually high yield comes with high risk. But in this case of covered call funds like SPYI, it's not necessarily about risk, it's more about trade-offs. So here's the deal.
You're basically giving up most of your capital appreciation.
Meaning the stock price itself isn't likely to shoot up over time like a growth stock would. Why? Because the fund is constantly selling call options. If the market goes up, it's selling off the upside to generate the income. So if you're investing in SPYI, you're not betting on huge gains. You're opting for steady, predictable monthly income instead of watching your portfolio do backflips. It's kind of like choosing a reliable paycheck over gambling for a big bonus. You're essentially trading the capital gains you would get from the stock price going higher
And trading that away for steady monthly dividend payments.
Alright, so let's dive into the numbers, because theory is great, but I know you want the real life receipts. So as of right now, I own 4.6 shares at SPYI with an average share price of $51.27. That's just over $20,800 I had invested into this fund. And I didn't drop it in all at once. I've been dollar cost averaging into SPYI over the last few months, starting about December last year, which basically just means I've been consistently buying in a little at a time, regardless of whether the price was up or down. That strategy has helped smooth out the ride. I avoid buying all at once at the high or low point, and instead build a solid position over time. So now let's talk dividends. Over the last 6 months, SPYI has paid out an average of about 50 cents per share each month. So with 405.6 shares, that puts my monthly dividend income at approximately $202.80, give or take a few cents depending on the monthly payout. You multiply that by 12 months, and I'm looking at around $2,434 a year in dividend income, all from one ETF. That's about an 11.7% annual yield on my investment. And again, this is actual cash hitting my account every single month. And I'm not relying on price swings and hoping the stock moons. This is consistent, dependable income.
And that's why I love SPYI so much. It has to be my favorite dividend investment.
I'm not chasing hype. I'm building income that I can see, use, or reinvest however I want. So now that you've seen the kind of monthly income SPYI can generate, let's zoom out. Because this isn't just about collecting a couple $100 a month. This is about building a high income portfolio that can eventually replace your 9-to-5 paycheck. Most people think they need to save up $1 million and follow the old school 4% rule just to scrape by in retirement. And sure, that's totally one way to do it, but my investment strategy is high income investing, which flips the script completely. Instead of slowly draining your savings by selling off your assets, you're living off of the cash flow from dividends, covered call premiums, and other income generating machines. Take my position in SPYI. I'm earning over $200 a month just from one ETF. Now imagine combining that with other income-focused funds like GEPI, QYLD, REITs, or even some solid dividend aristocrats. At that point, you're not just dreaming about retirement. You're building a personal cash machine that fuels it. And even earning $200 a month is freeing. That's money I could use for unexpected expenses, to boost my emergency fund, or my favorite movie. I could reinvest it and watch that income snowball. This strategy really shines when you're saving aggressively like I am. Every month, I'm stacking shares and reinvesting the income, and over time, the compounding starts to feel like a cheat code. And the goal? To reach a point where my portfolio's monthly income covers my monthly expenses. Because that's not just retirement, that's financial independence. That's real freedom. And the best part? It doesn't matter whether the market's up, down, or doing backflips, because I'm not relying on selling shares. I'm just collecting the income and keeping the machines running. After running my own numbers through a drip calculator, here's what I found. If I keep adding $500 a month to my SPYI position for the next 10 years, and the dividend stays around where it is today, I can expect to be earning over $1,800 a month in dividend income, which is mind-boggling because that's enough to cover major household expenses like groceries, utilities, subscriptions, and more. And here's the key. I'd be doing all of that without needing to touch the principal or sell off any of my shares. My final portfolio value would just be over $180,000, and all of it would be working for me. The point is, you don't need $1 million to retire or live off investments. You just need to be intentional, invest consistently, and focus on income-producing assets. Even a portfolio of $500,000, $500,000, can realistically yield around $60,000 a year with high-income investments like SPYI, which would be $5,000 a month. It's not magic, it's just math and a bit of discipline. And that's the power of high income investing, turning your portfolio into a monthly cash machine that works while you sleep. If this video lit a fire under you or gave you a new way to think about financial freedom, smash that like button like it owes you money, and subscribe if you're ready to take control of your cash one paycheck at a time. I drop videos every week breaking down real world investing strategies without the fluff. So if you're tired of hearing, just buy index funds and wait 40 years, you're in the right place. Let me know in the comments, are you building for income, growth, or both? And if you hold SPYI, I want to hear, how's it working out for you? Thanks for watching, keep stacking, and I'll catch you in the next one.